Welcome, everyone. We've got lots of content to share this evening, so an interesting topic for sure. So we're excited to have you all. Thank you for joining us.
Hmm.
Good to be here.
Does anyone else's Zoom look different? Mine is showing like two people big at the top and then bunch of that's I've never seen this view before.
Hmm.
Bunch of small people at the bottom. New one for me.
Okay, I think I'll watch the waiting room, but we're probably good to get
Okay.
started here. So I'm just going to pull up our
So
presentation. Um, Maybe we can start out because some of this it'll be interesting to see. I see lots of familiar faces in the group, but just let us know maybe in the chat where you're joining from, whether that's Calgary or Canmore. I see a few people, anyone from Ontario, just so we kind of have an idea as we're chatting here as well.
okay.
Cochrane, Montreal, great.
Back.
Cochrane,
Mhm.
Canmore. Oh, from Calgary, Donna. Okay, great. You're in Calgary today. Awesome. All right. Well, we're going to get started then. Welcome, everyone, again. Thank you for joining us this evening. We are going to be kind of diving into a few different types of deals this evening and breaking them down, sharing some lessons learned, going through some of these transactions ourselves, as well as supporting and representing clients through them. So I'm going to hand things off over to Natasha to get started, and we're going to dive right in. If you have questions along the way, of course, don't hesitate to put them in the chat or you feel free to unmute yourself as well.
All right. We will dive in. So I'm going to go first. My name is Natasha Phipps. I am the co-founder of the Phipps Real Estate Group. Andrea is my partner, and I'm an investor first and foremost. So been a licensed realtor now for 18 years. So lots of experience along the way in many different types of deals, and that is from my own acquisitions and representing clients. So I'm going to highlight a few things here in my session regarding foreclosures specifically, and then a bit about multifamily as well. I did do a full hour-long multifamily event in December that's on our YouTube channel, Calgary Real Estate Investing. So if you're specifically interested in multifamily commercial real estate, I highly suggest watching that because I spent the whole hour on just that topic. But we can dive in and go to the next slide here, Andrea. Before we do that, sorry, I forgot about this slide. We are located here in Calgary and we do residential, commercial, and property management services. So, being able to get a good look at these three sectors of the market does give us a unique perspective. My parents' family business is in new construction as well. So, in staying close communication with them, I think I have a unique insight from construction all the way to sales and then to management with the team. So we like to share everything we are learning along the way. And we do these monthly or so, these real estate type social events to really share with you what we're seeing out there in the marketplace, what we're learning, and hopefully provide you as much value as possible as you are in your real estate journey. So we can go to the next. Okay, so just before I kind of talk about the nitty-gritty when it comes to foreclosures, I think the challenging thing with us here in Canada is a lot of the content in podcasts and YouTube and stuff is American focused. And it often paints a very different picture than what foreclosures actually mean here in Canada and specifically here in Alberta. So in in Canada, they're not nearly as lucrative as what is sort of, I think, told on these other outlets. So it's something to be aware of. So what I really want to focus on here is balancing what the actual risks are, what the process is, what the benefits potentially for you are, and that'll give you a much better look at if this makes sense for you and if this even aligns with what you have in terms of skills, resources, in terms of actual strategy. But it's important to kind of like rewind and go like, how do these foreclosures happen? Because to create a win-win situation, either in a pre-foreclosure environment or once it's actually at a foreclosure, it's important to think that there is people here in these situations, and often by time they get to a pre-foreclosure or a foreclosure spot, they are in a rough spot. It can be from loss of job, illness, divorce, death, all kinds of things that are usually difficult things. And so for us as real estate investors, there can be opportunities for us to potentially find win-wins in these really challenging scenarios. No one wants to get to a foreclosure situation. That's never anyone's goal when they buy a home. And so if at ever possible, if ever out there in the world and someone's in this path to foreclosure, the sooner that we start looking at it and trying to find solutions, the better for that individual. There are all kinds of different ways to sort of help them, but the sooner the better. And often it doesn't take that long for foreclosure proceedings to start happening. Technically, after missing 1 month payment, the bank could start to take legal action. Very often, that's not what happens. They're going to reach out to you as the borrower and try to see if they can work something out. But if you go months without a mortgage payment, foreclosure proceedings will start to begin. And so it's just important to think about that we want to try to be problem solvers to these people to try to create a win-win situation. And if you do go into a showing, for example, sometimes there can be, things that are challenging to see. You see maybe situations that are difficult. You could see people who are combative, even they don't want us there. So trying to treat it as with a human element as much as possible is really going to help you go get better information, be able to actually see the property, that kind of thing. So I really want to point that out as the first and foremost thing. And we've seen that time and time again, even with a current listing that we have right now, which I'll tell you about a bit later. But often very delicate situations. So in looking at foreclosures as a strategy, I've had many people ask, where's the secret foreclosure list? Right? Like, where do I find these things? And the one great thing about here in Alberta is they are on the MLS. By time they get to foreclosure, what happens is the lender then chooses a realtor. If they don't know one, their lawyer may recommend one that specializes in foreclosure sales. So us as realtors, if we want to look up what the current foreclosures are in our city, we can do that based on the seller's name or the type of listing that it is. So it isn't some secret. There's not some secret database somewhere. It's very easy to find. And if you want a search set up like that, just let us know. We can absolutely do that for you. Really not a big deal. But it comes down to how much opportunity is there and why or what is the goal of the listing? And this is where I think we vastly vary from other markets is the court's job in this situation really has one goal, and that is to get the lender back their money as much as possible. And they're also not in a rush. They're not in a big panic. It's not like hurry up and get this done tomorrow, because they do want to kind of thread the needle between making the lender as whole as possible while listing it at an appropriate amount for the market. So they want a fair market value. They do not just want to fire sale this thing and move on with it. Now, the good thing is that the bank doesn't want to own the home. They don't want to take it over. So in the meantime, if someone is in this foreclosure situation, often whoever's living there just stays living there. So that gives that person potentially time. During that period of time, almost always, and occasionally not depending on the situation, but almost always the homeowner does have the ability to like redeem and find a solution on their own up until the last minute. But very often that doesn't happen if they've gotten to this point. But say a family member could come along and buy the property, or there could be things that happen that create a win-win scenario for the current owner. But if it does go all the way to foreclosure, then that is the primary goal of the court, full stop. And so we're going to see some examples I'm going to talk about later too. I feel like that was the only priority they have. They're not thinking about tenants or who's in the property or any or what's happening at the property. All they care about is really that once it gets to that point. So we'll go to the next slide. So I want to talk just, I know this is hard to see. This is CMHC data. So if you want to go look this up for yourself, you absolutely can. But the point of this is how are foreclosures doing in Canada? Where are we going with this? Are we going to see more foreclosures or less? And this chart is an interactive chart on CMHC's website where you can slide the needle to kind of give you each period of time the foreclosure rate that it was in the past and the projected rate up until the end of 2026, I think is what this shows. So I snapshotted here the forecasted rate for December 2026. So as you can see, which is no big surprise here, Toronto is looking to be forecasted to be the highest foreclosure rate in our country. I don't think that's probably surprising to anyone considering the amount of pre-construction condos that we are seeing. There's a lot of economic factors when it comes to Toronto I'm not going to dive into, but these kind of metrics are what you kind of want to watch. So if you are like open to investing anywhere in the country and you really want to focus on foreclosures, then this is a good source of data to look at. Now, it is also important to consider that the news I find does sensationalize this kind of stuff often. The reality is even in like our toughest economic years, foreclosure rates, in the last couple decades, especially, are actually quite low in this country. That's due to things like the stress test that was implemented and legislation that is protecting consumers from mass foreclosures. And we've seen that happen in the States where there is less regulations when it comes to who can borrow what amount. There's less regulation when it comes to the banking system and mortgage system. So overall, we do have, good protection in place for our consumers. But that being said, there's all kinds of factors that we can't predict. So Calgary is actually sitting not too bad. I did compare, and in this article, it did compare especially Calgary to Edmonton. And the reason the Edmonton's forecasted foreclosure rate was quite a bit higher than Calgary was that there wasn't as much economic diversification when it comes to employment. So the employment piece is a big one for Calgary and one that we've been talking about forever, and especially in the last few years that we're so excited to see Calgary being more and more diverse when it comes to employment opportunities. So Calgary sitting at 1.8% of mortgages projected potentially to be in arrears come December 2026 is the number that we're looking at here. Okay, go to the next slide. Okay, so if we're interested in foreclosures, how do we actually go about buying these things? So we talked about Court of King's Bench. So their priority is to get fair value for the lender. That is their goal. And so if we want to buy one of these, what does that mean for us as the buyer? I'm going to go through that now. So first question often comes as viewings. And just to give you an example, Andrew and I have 3 court-ordered sale listings right now in a fourplex in Bankview. And we do have the 4th unit listed as well. But Andrew, it probably took, what would you say? Like, it took us almost 6 weeks to get the keys.
Yeah.
And then it took us probably another month to build some rapport with the client in there. And by the time we got there and started to build some rapport with this gentleman, like they've been through it, right? Like they've kind of been through a lot of stressful things up until that point. So it does take time. It took us time, and we were awarded the listing by the courts, and it still took us that much time to get the keys. So viewings may or may not be possible depending where in that process things were, right? In an ideal world, you get the keys on day one of the listing, but it honestly took us just about 6 weeks. So it may or may not be possible. And then there are situations too where like it's not safe to view the property for reasons, you know, structurally with the property, something, a grow up or something else at the property that means it's physically not safe to go. Also, really, combative people in the property. So sometimes that is not, possible either. So there's a wide range of viewings and what may or may not be not just possible, but realistic and safe. The third thing there is financing. So financing is a really, really, really difficult one. Securing financing can be tricky for a multitude of reasons. Often, not always, but often you'll find these properties may be distressed. So, like handyman special type thing. And if you've bought a handyman special or property marketed that way, you know that the major lenders don't like those properties. And so you're needing to find alternative lenders. But the big one here is making that offer in that um, the lender and their lawyer also will not typically go to the courts to set a court date to present your offer until they have a clean offer, meaning no conditions. It's a firm, offer. And so again, that can make financing tricky. So having cash, I mean, cash always works. Access to line of credit or a private lender, kind of like Calvert or something along those lines, often is used in these types of situations. So, how can you do your homework? This is a big question, and there's two sides to this coin. So, if I'm the listing agent and you call me and say, "Well, Natasha, what about this? When was the roof done? Can I see an RPR? We have all these questions. Every single one of those questions, me or Andrea as the listing agent, we cannot answer a single one of them. So we really are zero help other than getting you into the property if we can, whatever information is on the listing. And that's really about it. We can't advise, we can't disclose, we cannot help really in any way. So that does make it challenging. But there are things you can do. You can look at old listings. You can look into the city of Calgary and permits and see what's going on there. You can pull the title to see what any history you might be able to find on the property. And this is where working with a realtor that has experience in foreclosures is really, really going to pay off. Obviously, when you go to view the property, being very mindful of what you are seeing, because in a typical listing scenario, if if the seller knows there's something wrong with the property, they have to legally disclose that to you. So if they know there's, something structurally wrong, or there's mice or something, they have to tell you about it. In this case, no. So when you go to the property, really being eyes wide open, noticing as much as you possibly can, so that you have a good idea at least of what you're getting yourself into. Um, I have seen people bring home inspectors with them to a viewing. You could do that. And so it's not a perfect situation in terms of the information. So you kind of got to dig around, getting legal advice as well if you're not sure on a few things or have never done this before. That could be make very good sense. And then in terms of timeline and deposit, on these types of listings, you always need to have a deposit with your offer. It's not a situation where you give it 2 days later. You need to have it with your offer. We, as the listing agent, present the offer with the deposit and say, we have the deposit, here's the offer. So that's a must have. And then the timeline is a big one on your offer because and it could be 30 to 45 days until a court date is set, but usually not quite that long, but usually up to 30 days. So your offer is open for all of that time. So typically you write an offer on a traditional residential listing, you're leaving your offer maybe open 24 hours, maybe max 48 hours, sometimes 12 hours. This is like open all of that period of time. So your money is out in terms of a deposit and your offer is open for quite a long period of time. So you have to be comfortable with that and know that you're kind of on the court's time now. And that's just what it is. Then the other thing is during that timeline, someone else could also bring another offer. So you're kind of a sitting duck waiting and wondering, what's kind of going on. Now, you would get the opportunity if there was multiple offers to potentially revise your offer, but staying in touch, checking in on things, being really inquisitive when it comes to that, asking questions is really important just to get an idea of what's kind of going on. Now, this one is a big one, is as is, where is. I think if you've looked around at any of these listings before, you've seen a lot of that sold as is, where is. And when you make an offer on one of these properties, it's actually a different purchase contract. And the courts often provide a revised purchase agreement as well as a schedule that accompanies your offer. And this is really where the as is where is really comes in a lengthier document. But really what it means is nothing will be disclosed if they know there is anything wrong with the property. um, it also doesn't guarantee the condition of the property. So if you view it today and then closing is in 45 days and someone breaks a window or takes out the lights or does something, you can't predict, like too bad. There's no representations in terms of what the property will look like upon closing day. So, and that also applies to the land. So let's say there's an unpermitted structure or there's something that's on someone else's land in terms of the real property report that you would normally get. We don't get those. There is no disclosure of where the borders are of the lot. So there's a lot of things to consider in terms of as is, where is, and that means that until you have the keys, that is as is, where is. Doesn't matter kind of what happens during that time. Now, of course, the court favors clean offers, which I already mentioned. I have seen scenarios where people submit an offer and then it'll be a short condition period, but either way, they're not setting the court date until it's clear. That's most typically. I mean, I'm not going to say never when it comes to courts, but that's typically how it's done. More offers are obviously possible during that time. And then on the court date, the judge's job is solely just to often just take the highest offer unless there's some, thing that's outstanding, like a condition or super long timeline or something. And they also set the closing date. So it could be 30 or 45 days, but you're not getting like a 6 month long closing. It's going to be relatively quick and that's your date and away you go kind of thing. Okay, next. Okay, so I want to talk a little bit about some lessons learned. So as you may or may not know, I'm also the CEO and co-founder of WealthShare. We're a private REIT here in Calgary, and we've acquired two court order sales of multifamily assets here in Calgary. Those don't come up very often. This is a little marketing thing that I found today from when we actually just submitted the offer to the courts. It was really exciting. And we had some incredible stories. I could probably write a book around these two things because when you have so many tenants and many units, and a seller that was really not wanting to let these properties go, it made for some interesting times. So I'm going to talk about some kind of like lessons learned or things to be aware of that I was surprised how different they were on both of these things. So on the Bergen, the when you win your property, you are given a vesting order, vesting title, and this kind of outlines if there are any terms. And in this case, in the Bergen, there was 21 tenants. And so the order said that we were also awarded the leases that went with those tenants, which sort of made sense. And we actually thankfully had a copy of those leases. But what we failed to, think ahead for was that the seller did not provide complete leases. There was schedules of incentives that were actually was like money being paid to them directly, or there was reimbursements happening. There was all kinds of crazy things happening that when we took over the property, the tenants were expecting us to abide by, which we did not plan for. So that was an interesting one. We had to really manage it with each tenant and come up with a solution because the court order did not include all these other schedules. We were not bound to honor those. However, it is a tricky situation, which brings me to the note about like the Residential Tenancy Act, and a court order, and which one of those kind of trumps which one, right? And to this day, I still don't necessarily have an entirely clear answer because we had two different scenarios with each of these things. So when it comes to leases, you can't just be certain it's going to be one way. You have to really be open that it could be any way, kind of like the as is, where is, but with leases and with tenants. So though the judge awarded leases, we did not get complete leases. And on those leases, there was also schedules that half of the tenants were performing short-term rentals in the units, which we did not know. And our insurance did not allow like our property to be operating as short-term rentals. So we had to go and, make some people unhappy, unfortunately, and let them know. And it actually wasn't outlined in their lease that they were allowed to be doing it anyway. So just like a couple things we, didn't really think about at the time. And then the last one, which was possibly the most frustrating one, is in the vesting order. And if I did this again, I would. We did learn on the second one is the vesting order did not make any comments about the security deposits. So we did not have any security deposits and did not assume any. And I later learned that all the security deposits had been spent. So that was really difficult because we had to assume the tenants, assume the leases, but we did not get the security deposits. We did try to, go after the previous owner for that, but there was nothing to get. So we did do the right thing. We did come up with the money to make sure everyone had their security deposits when they exit the property, but it was something that was like, not laid out clear. If I was doing that again, now I would definitely know to make sure that my lawyer inquires about the security deposits. So that was one, if they exist, and they may not exist. But in this case, they did exist. And this was actually a professional, like management company operating it. So they did. On a smaller property, if it's a little house or something, maybe they don't even exist and it's not even a proper tenancy in place. And then the Winston, we had some really fun things. These were more townhouse style units, and the appliances were a big one. And this was something that I did not know. I've never heard this come up in my entire career in real estate. And after we took possession of the Winston, we got a call from Trail Appliances. This property was a couple years old already. It was fully operating. When you buy a court-ordered sale, they do clear the title of any outstanding debts, right? So we got clear title. So we're thinking we don't owe anything. Well, for appliances, when a builder does not pay for their appliances in full, they actually have there's a system in Alberta, and I should have looked it up. It's kind of like where you would report theft of items. And all the serial numbers of all the appliances Trail Appliances had, and they had registered to this database. And they basically wanted to come get the appliances from us, which again, we did not plan to replace appliances. So that was a big one. So again, ask your lawyer about those things. If it's a newer property, inquire about appliances. Again, our lawyer didn't bring it up, and it's very rare. It does not happen very often, but something I would now check. In this case, we did make a deal with Trail Appliances, and we did have to cut them a check. Otherwise, they were prepared to kind of come after us and come and get the appliances. So in this case, the judge did not award leases, which was odd. And we actually could have legally kicked out all of those tenants with like 20 days notice. Like the judge was sort of ruthless when it came to the tenants. We did not want to do that. We wanted to keep the tenants. But we had to re-sign leases with everyone. We had no leases. We had no paperwork. We had a court order that said we actually could get vacant possession within like 20-day notice. So that would have been really tough for those tenants, which we did not want to do. And the last one was just kind of a funny one in that as is, where is, even when it comes to leases. when we took possession, there was a family that was just moving in, and I had learned from them that the day before closing, the previous owner sat there and did an open house, and the rental market was very hot, and they put a very low rental rate on this property and got it leased immediately. However, they had asked for like $1,000 marketing fee instead of like a security deposit. And so these people moved in, were paying under market rent, so they thought didn't have a security deposit. The previous owner took off with that marketing fee, and we had to rectify this. So as you can imagine, they were very upset when we had to bring them to market rent. So just another thing, as is, where is applies to leases. Okay, onwards. Okay, I'm going to try to go through this a little bit quicker. I know Andrew has some great things to get to as well, but multifamily, a few tips that we see over and over again, and recent things that have come up just in the last month with clients is when we're looking at multifamily real estate, not to get too caught up in the numbers at the very beginning. It's good to do an initial analysis. I like to do underwriting initially with the mortgage broker, get a look at the mortgage. But if we're like really getting in there and fine tuning and stuff at the beginning, it's really challenging because you don't have their financials yet. You don't actually have the leases yet. You don't have the financials yet, and you can burn a lot of your time and energy. And so really, what we recommend is taking a 10,000-foot view, get the property under contract. If it's making sense there. If it's not, then don't. But if it's making sense, then we dive into the details and really kind of drill down from there. Because we don't know what we don't know yet until we get it under contract and get into our due diligence period. It's just really impossible to verify each and every one of those numbers. And then number two is when you do make an offer, act quick. We have had this happen a couple times this year where we've made an offer and we're kind of humming and hawing and going back and forth. And then guess what? They use your offer to go get another offer. So if you're going to make an offer, I recommend, even if it's been sitting, this property had been sitting for almost 200 days, um, just move quickly and get it under contract. If we find something we don't like, we can always try to renegotiate later, potentially. But if you're going to make the offer, be prepared to move quickly and get it under contract for your own sake. The third one here is 5% down. The CMHC MLI Select program. I think you've probably seen a lot of posts out there in the groups about people struggling to close right now. They need extra guarantors, and that's because they had one strategy only when it came to buying whatever multifamily they were looking at, and that was 95% MLI Select loan to value. And guess what? Things are not working. And so the reason they're not working is because that 5% down marketing was related to loan to value. And loan to value is not the same as loan to purchase price. And CMHC's job really is to reduce risk. So they are working to push the valuation down, which could mean your purchase price is here and your valuation is here. And now you're seeing posts out there if people need an extra, few $100,000 to close. So always, always, always have a plan B and C. Plan A, great. If that works, awesome. But there's all these variables when it comes to multifamily that will change your loan amount. And that will, in effect, change how much cash you need. And that is the main risk and problem with multifamily that people are running into right now. Again, I dove into that quite deep into the event that we did in December. And then the last one is really trusting the team that you are planning to work with and be open with them. We are here to support you, and like your mortgage broker and your realtor in this multifamily game, we're all on the same team and let's work in the same direction here. Okay, next. I'll go over this quickly and then I think Andrea is on. So CMHC continues to be the biggest opportunity and the biggest risk. They are a monopoly. They are the only insurer when it comes to multifamily real estate in Canada. So whatever they say goes. No point in complaining and whining about it because they don't care. They're going to do what they're going to do because their job is to protect their mandates and to protect their risk. So they make the rules. Rules are ever changing and changes are immediate. So to the examples about needing more cash to close, those kinds of things, as you're seeing those posts, Those are really good examples of that where the rules can change overnight, and often, almost always, it means more capital is needed or another strategy is needed, another lender is needed. So always have a second plan in place. And then when it comes to the MLI Select program, it was popular because of the high amortization up to 50 years, the loan to value potentially up to 95%, and the interest rates used on those are bond rates, not Bank of Canada rates, which in the last few years has been quite favorable. And but their mandate is really around affordability, energy efficiency, and accessibility. That is their goal. It is not for us as investors to try to, you know, kind of take advantage of the program, if you know what I'm saying. And so they've made a lot of tweaks and changes in the last year where they felt that was maybe happening. So we can no longer package up a group of houses and put them in this CMHC program because that's not true multifamily real estate. So if we're looking at multifamily, we want to go CMHC, it needs to be on one title. Um, and just really being prepared that there could be changes to whatever you are looking to do, and those changes happen overnight. One prediction I do want to share is if you are looking for opportunities this year, I do think that there are going to be folks who I just kind of spoke about that will have gotten themselves into a little bit of trouble potentially because they did their valuations when rental markets were super high, going back, 12, 18 months ago. And now that those properties are getting completed and the rents have maybe come down a little bit in Edmonton and Calgary, that means the valuations are coming down, which means they potentially cannot close or they need a creative way to close. And so us as real estate investors being problem solvers, or potentially, being able to act quickly is going to pay off this year. I promise you there will be deals that will come up because of that, but it will mean acting quickly, being a problem solver, and being able to kind of come in and likely you're going to get the property at a better deal that way as well. So being eyes wide open to those scenarios out there right now. And yeah, so if there's anything we can do to help in that space or you want to connect on multifamily, we are here to help you. Okay. Sorry, that went on a bit longer than I hoped, Andrea.
Awesome. No, that was a lot of information jam-packed. So if there are any questions, let us know and we'll have a bit of time at the end here as well. I'm just going to change things over. Just bear with me for 1 second. Okay. Okay, so for anyone who doesn't know me, my name is Andrea Tessier, and of course I'm with the team as an investor-focused realtor, and I'm team managing partner. I'm going to be talking a little bit about tenant-occupied properties. We work a lot with tenant-occupied properties on the listing side as well as on the buying side. It's just inevitable, of course, focusing on investments and rentals. So I did want to start by talking a little bit about the difference in Alberta between fixed term and periodic or month-to-month leases. So this can vary from province to province. And I find also a lot of landlords aren't always just aware of the differences. So your fixed term lease, if a tenant's on a fixed term lease, it has a specific start and end date, right? You're going to set that in your lease. It could be a fixed term of 6 months, of a year, of 18 months, whatever it is, but it's a fixed term. It starts and ends on those dates. And it ends at the end of that date. So in other provinces, after a fixed term ends, it rolls over to month. That doesn't happen in Alberta unless both the landlord and the tenant mutually agree to do that or to renew for another term. The lease ends, like the tenant has to be out. If you're looking at a property as a buyer where you're purchasing and there's a fixed term lease in place, we really want to know what is that timeline because you have to assume the lease until the end of that term. You can't end it early. You can't change the lease. You have to assume the terms of the lease until the end of whatever the set term is there. Versus a periodic or a month-to-month lease. So a periodic or month-to-month lease, you can have on a month-to-month basis, or you can have a periodic yearly lease as well. But essentially, it just continues to roll over and roll over until a legal notice is served to terminate the lease. If you're purchasing a property with that month-to-month, there are limited reasons why you can terminate the lease. Of course, unless the tenant is in violation, they're not paying, they're causing damage, whatever it may be. So that's really important to keep in mind versus the fixed term, that's the end date. Again, the tenant doesn't have the right necessarily to stay in the property unless it's agreed upon after that end date. Month to month just keeps going. And we're going to kind of dive into the reasons why you could give notice. I think this is a common misconception. People often think, oh, well, if it's just month to month, I can just give them, their 90 days or three tenancy months notice. And we'll talk about that a little bit more on the next slide, but that's not true. It has to be due to one of these specified reasons. So these are pulled from the RTA and are the reasons why on a month to month you could end the lease. So if the landlord or a relative of the landlord intends to live in or move into the residence, you could give notice. If the landlord sells the property and then the purchaser or relative of them plans to move in, if the landlord sells the property and they receive in writing from the buyer that they want the tenancy to be terminated, then that's a reason. So that's really important when we're looking at buying or selling because that timing is important. It would have to be written in the offer as a term to say that the tenants or the landlord is going to give the tenant notice that they're going to move out. It can't be that you purchase the property, you take it over, and then you try to do that. It would have to be done within the offer itself. If the landlord intends to demolish the building, or if the landlord plans to change the use for the building, um, or they're planning to convert it into a condominium. So that's kind of the set reasons why you can give notice, not just because, you don't want those tenants in there anymore, or you've assumed this lease and now you want to change things up. It's important that we're looking at that specifically. With that, so if you're under one of those reasons why you can give notice, it's 3 full tenancy months of notice. So this is another one where I see people get a little bit mixed up, or they think it's 90 days, but it's actually 3 full tenancy months. So for a scenario here, if a tenancy starts, most people or often people start their leases on the first of the month. That's when the tenant pays rent. That's when they originally kind of moved in and started. If you are looking to purchase a property, let's say you're halfway through the month, so you put the offer in at the beginning of the month, and then by the time you do your due diligence, conditions are waived on June 15th, and you've put in your offer that you're requesting the landlord to give notice to the tenants, that's one of the reasons that you can do so. Then the earliest the notice can begin would be the start of the next month, July 1st. So that 3 tenancy months would be July, August, September, meaning that if you wanted vacant possession, that wouldn't be till October 1st. So it's not 90 days from when you waived your conditions. It's 3 tenancy months, and that's for vacant possession. So, you could potentially take possession of the property prior to that and take over and assume the tenants until the end of their lease. But if you're wanting it to be vacant, that's really important to take it and keep in mind, especially when we're putting in offers, and as well as a seller to note that if someone is offering on your property and you do have those month-to-month tenants in place, so the 3 full tenancy months for those reasons described in the previous slide. So we recently, we're talking with a seller that I want to share an example with about what they should do with their property. So they have leases coming up in the next couple of months. Generally, on the selling side, we advise sellers to list within about 90 days of leases coming up, unless the tenant is, an immaculate tenant. They keep the property exceptionally clean. Maybe the leases are and the rents in place are, I would say, at minimum at market value or a little bit above. Then in those scenarios, okay, we might be listing the property with the tenants in there. It doesn't really matter where they are in the lease, because for someone to come and take them over, it shows well, they're getting really strong, great rents. That may be really desirable because it's something that's turnkey and easy for someone to take on. If that's not necessarily the case, if the rents are a little bit lower or the tenants are just a bit messy in there, doesn't show as best as it can, then typically, we're kind of advising we want to be closer to the end of the lease within that 90 days range so that a buyer has some options. Potentially they're okay and they might want to renew a lease if the tenant wants that too at the end of their term. But if it's on a fixed term lease, then they also know that there's an end date, and then it gives them the option to either move into the property themselves or potentially place new tenants. So it opens up the buyer pool a little bit more. So with the scenario we had recently, a seller was asking, the tenant had actually asked if they could move to month. They were on a fixed term lease that was going to be ending in a couple of months, and they were looking for a property to purchase. So had said, could we just roll over to month? The challenge again with that is if they roll over to month and they don't find something right away, it's going to keep rolling over and over and over, right? And it could be challenging for someone who's stepping in. We've seen scenarios where, a tenant has a property under contract. They just, maybe it's a new build and they haven't got the official possession date, but it's kind of within a range. And then maybe moving over to month can make sense because it's going to be within that reasonable range. But when we're listing, again, if that tenant maybe is a little bit messier or the rents aren't quite where we want to see them, then it makes it challenging, right? As investors, we're all going to be looking at the numbers for anyone that's analyzing the property. And if they're in a longer fixed term or they're rolled over to month, it can be a bit more challenging for someone who wants to move into the property to do so. So from a selling perspective, we want to open it up to the biggest buyer pool possible to give lots of options there. Of course, we understand as well, we don't want a seller to see a lot of vacancy. So it's a bit of a balance, right? Hopefully we can get it on the market and get interest in there. So there isn't a long period of time if those tenants were to move out before someone else would take possession. But those are, I think, some important considerations and often where we see a bit of confusion or mix up and where it can differ from other provinces as well. So that's kind of the main thing I wanted to talk about with the tenant occupied properties, but I know that we jammed a lot of information in there in the last 50 minutes or so. So I did want to open it up to see if there's any questions about any of these scenarios that we've been talking about specifically, or if you have a property where you've been looking at with this that you might have specific questions about, we'd be happy to chat that through as we have a few minutes still on the call here. Feel free to put in the chat or unmute yourself as well.
So while you guys are thinking, I was just thinking there's not really a good reason to assume assume a month-to-month tenancy unless it's in multifamily sometimes because you have no choice. But in the residential world, there's not really a good reason to do it. If they're operating month to month, you can ask them to put it over to a fixed term lease. I mean, they might say no, they don't want that headache, but it does put a significant risk on you. There was a scenario with a realtor that I know a couple years back whose client assumed a month-to-month tenant, then gave notice that they were going to actually move into the property, but they did not move into the property. They just gave that reason. And this tenant scoped that property out and found out and was watching it and made a complaint. And it turned into quite a big legal matter for this investor. And they ended up having to sell the property because they couldn't rent it because they gave reason that they were going to move in and they weren't planning to move in. So there are tenants out there that definitely will follow up on all of those things if we're operating in the gray. So just don't operate in the gray and then it won't come back to haunt you later. And then on the multifamily side, my kind of comment there was usually we see this, especially in the smaller surrounding areas where the original lease was written 12 years ago, 7, 8 years ago, and it's month to month, and it's been the same kind of people living there long term, and it's the same, guy or couple who's been managing it, and oftentimes they just don't care to, renew the lease every single year. Occasionally they will get it actually in fixed term, but oftentimes they can be a bit more challenging because they don't have like proper documents or financials in place like you might see with something that's being actually managed here on the ground. No questions? Nothing at all. Okay.
Well, if you're thinking of something later or you're looking at a property where in one of these different scenarios, don't hesitate to reach out. We're here to help. And yeah, these are some of the ones there's just a little more consideration or some other factors that are important to keep in mind. Here is our contact information. We do have a few of our other team members on the call this evening. I saw Michael in there, Aaron, Dax, and Sean are all on the call. So We have a great team of realtors and investors, and we've got Marilyn on here as well. Perfect. And a full-time property manager as well, Una. She's not with us on the call this evening, but if you ever have questions about any of these different things, we are here to help. Feel free to connect with us. We've got our website, email. We also have our private Facebook group, Calgary Real Estate Investing. We'd love to have you in there if you're not already. And then our Instagram account.
Awesome. Yeah. Also, if you want this search set up for foreclosures, we can absolutely do that for you. No problem. All right.
Okay. Well,
Thanks,
thank you so
Andrew.
much. Yeah, thanks so much for joining everyone this evening. Have a
Thanks,
great
everybody.
night, and we'll see you on our next one. We are going to be announcing that within the next couple of days here. We're just finalizing a few of the details of our social for March.
Awesome.
Okay, take care,
Thank you very
everyone.
much. Thank you.
Okay, good night.
Thank you.
Bye.